let's start, guys. Let's start. So now, as I was saying, I said, for those of you, this gold, see, let's settle down and analyze this gold, so that as we are taking the trade, we are not going to make any error. As you can see, we are happy about the trade we took on gold that is in profit. Imagine on Monday morning, your market is playing, it will give you a go ahead. Rest of the week, you will not take unnecessary trades. As this one don't give you money like this now, you will settle down to retake another trade. You understand? So now, let's look at it. Now, if you look at this chart now on daily time frame, this daily time frame on gold, you can see that gold is actually forming a ascending triangle. Now, how do you know ascending triangle? If you don't know, you just say an uptrend without breaking the highs. You understand? It is not breaking the higher parts, but it is not coming to retest the lower parts. Now, see, let me tell you, when a market is making an uptrend, what are you expecting? You're expecting a move this way. You're expecting a move this way. Let me point this out. So, market moving, bam, 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 bam. You understand? So this move now, this is an uptrend. And why is it an uptrend? It is an uptrend because it is breaking the upper side without breaking the lower side. See, this one is not breaking. So it is leaving a lot of liquidity below. And that's why whenever uptrend complete the movement I want to reverse, you always see a massive pullback. You understand? Trying to clear all this liquidity here. So now, so this is how the market has been clearing breaking the upper side. That is a break of structure. You understand? If you watch the YouTube videos, you will understand the difference between break of structures and change of character. So that anytime you are analyzing a trade, you will not get confused. It even help you to quote the exact thing that might happen in the market. You understand? So now, at this point now, instead of this market making the same thing, you can see that the down part, it is ranging upward like this down part, but the upside now is just a horizontal. That means it is trying to break, but it never succeeds to break. So anytime the market break above, we just expect a retracement and pump. Now that's why they call it isometric triangle. Isometric triangle is just like a continuation pattern. You understand? Sorry, not isometric triangle. Oh, my mouse. Is an ascending triangle. Why? Because the down part is ascending upward, while the upside is just down. It's just horizontal. You understand? Just like a resistance trying to pull it back, a very strong resistance. They call it institutional zone. You understand? But this side now, they just say rising wage or uptrend. Yeah, this one you cannot call it an uptrend because it is not breaking the upside, but you can call it ascending triangle. Now it's just a triangle this way. You know how triangle is. You understand? So let me complete the triangle. You can now say, is this not a triangle? Yes, it is a triangle. I know you will say yes. Yeah, this is a triangle. This is supposed to be angle 90. Clap for me, guys. So this is a triangle. You can see. So what the market is actually doing is that the market is now ranging. It came into the triangle with this first one, making the angle this way. Then it started ranging. So as it is ranging, you can see that it is not breaking the upside, neither is it breaking the down part. You understand? It's just like a range, but the down part is ranging upward. You understand? So that is what happened. Then suddenly, if this market break above, bam, just know that we are going to see a retracement inside this triangle. It must be inside. Most of the time it's inside there. Sometimes it will just pick this place depending on how volatile the market is, but most of the time you will see it coming inside this triangle and continue movement. And remember, I always tell you, it's not all about knowing where to place an order. You understand? Knowing where to put a buy or where not to put a buy. Instead, you will know that I always tell you, when you make this high breaking above, you just know that previous low is your stop loss. So that means if you're placing your stop loss is supposed to cover this low. You understand? This is the low level. So it's supposed to be below this low. So that's why if you are taking a trade now, if you take this trade here, maybe you take it here like this, then place your order this way. Then you place your order this way. Excuse me, guys, getting a call. Then you place your order this way. If you place your order this way, then your stop loss now, you are supposed to set your stop loss to be below this level. To be below this level. How are you? Good morning. To be below this level. Now, this is the perfect way to trade whenever you are trading an ascending triangle. So if you look at gold now, this is perfectly what gold have done. Gold has actually broken above. What are we now expecting? We just need a pullback. You understand? For those of you that doesn't know how to trade pattern, now, if you don't know how to trade pattern, okay, nice video. Okay, thank you. If you don't know how to trade pattern, then what you need to do is just know your support and resistance, which means this place is a resistance zone where the market has been trying to break. So what are you now expecting? After you break a structure, what do you expect? You expect a pullback. Market will retrace to that structure for a continuation. You understand? That's why they say a rising triangle is always a continuation pattern most of the time. But sometimes the market can decide to violate the rules, and the possible way it can violate it, even if it tries to violate it, is just to clear people, because there's some people that whenever they have seen this rising triangle, just like the way we took a buy yesterday, as we took the buy and the buy now successfully break above, it is a high risk. So don't just get me wrong. You understand? So some people that will take a buy the same way we took a buy, the market sometimes will try to violate it and try to clear them before breaking above. So that means the market can decide to, instead of coming to break above this level, it will pull back to this zone before continuing the movement and break above. You understand? Then come back and break above, then retrace, then continue movement. And in this kind of situation, how do you tackle it? Just count 1, 2. The third one, you want to start trading. The third one is always the possible place to place your entry. That means this kind of movement, what I'm saying is that most of the time how I trade this movement is that when I see this move trying to break below, I'll just count the one first hit before the break below, then the second hit before the break below. The third one, I will mark out the other block that is there. Then the other block I will be marking out will be my entry zone. That is how I tackle this situation. I hope you guys are understanding. Please keep tapping on your screen, keep liking the live, please. And make sure you go to our YouTube channel to check the video we uploaded in the midnight, please. You can hear me, guys? Yeah, thanks for the like. Yeah, Austin, thanks for the like. Panther, thanks for the like. Okay, as I was saying, this is how we tackle the situation. You understand? This is how we tackle the situation. So now, let's leave all these things and go back to the bone of the contention. You understand? Bone of the contents. Oh, yeah. Okay, now remember we are on a daily time frame. So what we need to do is to mark out the possible retracement levels on daily time frame. You understand? The support and resistance and go. Remember, I always tell you guys that no matter what you are doing, don't just think that support and resistance is not necessary. That because you are SMC trader doesn't mean that you don't need the knowledge on support and resistance. So please, good, welcome. So please, mind you that all these things are very, very important. All these things are very, very important. So now let's look at it. If you look at this structure now, you can now see that there is actually an internal vibrations that the structure had. You understand? So these vibrations is what we will be marking out for the first time. Then we'll put shit out. We know that the markets have actually respected some of them, but that does not mean we should not mark it out. The reason is that even the place that markets have respected, the market can still come back and respect that zone. You understand? So that is what happens at time. So now we have marked out two levels on daily time frame, which is the levels we'll be looking at on daily time frame. Then because of these two levels, we are now moving down to 4 hours time frame. Now we check our daily time frame candlestick pattern. You can see that there is actually a precious candle lying on our demand zone. So on daily time frame, before we move to 4 hours, let's mark it out. So now I will be moving to 4 hours time frame. On 4 hours time frame now, let's see what the market goes for us. Now on 4 hours time frame, we can now see that the market is not actually giving us a very perfect demand zone at this zone, but we have a breakup block here. You understand? We have a breakup block here. So now what are we now doing? What we'll do first is that on 4 hours time frame, we first need to mark out this level where the market's expected to break above. This is the liquidity level where the market is supposed to clear before possibly coming back to retrace a zone. You understand? So after retracing to that level, maybe try to break above it to liquidate people that took a sell at this zone, placing their stop loss above. Oh, you guys are not seeing. So liquidate people that took a sell at this zone and put their stop loss above here. All these people that took a sell here, the market will try to push them out, possibly before retracing back. But still, you can retrace from this zone. So because of that movement, I will now mark out my 4 hours breakup block on this zone. Mark it out now. And now mark it out. So now this is my 4 hours levels. I will extend this place to attain a good high. So now on this zone, some people might be like, okay, why didn't I take this zone as my breaker block? Oh, I'm not taking it for now. Yes, currently I'm not taking it. Why? Because I want to see what the market left. So if market really wants to respect this zone, then it's going to leave something special for us at this level after breaking above a good demand zone supposed to lie between here, or liquidity level where the market can clear. But for the meantime, this place, if the market decides to clear the people out of here, this place will be the best place for it to rest because of this good pullback, showing you that it's actually a resistance that the market came to retrace after breaking it above and continuing the movement. So now I'll be moving to 2 hours time frame. So on 2 hours time frame now, we can see that the market is massively making. Please, if you have not taken profits from the trade we took yesterday, it came close to our take profits and pullback. If you don't take profits now, I wonder what you try to, whether you try pull weights with gold. It doesn't mean you can just take profits. At least Monday morning you're making profits. It's not bad. So now we can now see on this market now, we can see how the markets were like ranging in a very funny way. Now the markets actually range this way, making something like a curve to upside. If you don't see the curve, let me show you. Now, is this not like a curve? Yes, it is like a curve. The market cannot just make a perfect curve, you understand, but the way it's reversed. So for those of you that are still like using your trend line to still mark out, you see, you can still mark out the zone this way. Mark it out this way after breaking above this level. Now it is a very volatile movement that the market made, and this one, no, this one does not affect it. So candlestick, okay, you can see bam, 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 bam. Now we are now moving close to what the markets have for us. You understand? Some people might say, oh, it's forming a cup and handle. It's not a cup and handle. This is just a normal curve the market made. So on this 1 hour time frame, Now on this 1 hour time frame, we can see yesterday this was where the market opened. You understand? And we bought it at this zone, 3 4 3 something. That is where we got our entry. Then the market is coming back to that zone. Remember, no matter what you try to say, on a low time frame, this is a breakup block. This is a breakup structure. You understand? On a low time frame, but on a high time frame, it's not just a breakup structure. It's just a normal pullback or a continuation after breaking above this level. So you can see that on this level, the market actually broke above it, retraced it, and continue. So now remember, we had another block down. So for this movement now, we can now say, okay, let's mark out the wick here, but we are now going to mark it out now. We are going to wait to see what's happening on the lower time frame. The most important thing you need to understand in this market is that we are on an uptrend. There is nothing like markets falling now. We just know, say, the direction of the market is going downward. You understand? We are going downward. I'm sorry, we are going upward. We are buying. So don't let anything confuse you. You understand? So because of this now, we check. We have already considered all we have above. Then we can now say, let's push out this level, this high, to this level. Now it is obvious to you that this is the level. This is the reason why this market had this pull. It's rejected, it broke above this level, rejected this level, retraced to this level, and boom. That means from here to here is now a demand zone, a support zone for this market coming down. So what we are looking for now is a perfect place for us to enter for liquidity sweep, so that it will not sweep us out of the market. You understand? So now let's continue. I'll be going, because of this, I'll be going down to 5 minutes time frame. On 5 minutes time frame now, we can see that it is looking too obvious for us that market left something here. So firstly, what I will need to do, what I'm going to do is that I'll mark out the bottom of this level. Okay, let me use the trend line. I'll mark out this level where it respected, then so my line, my breaker line. You understand? That is what I will mark out. Then I'll go to 30 minutes time frame. Now, some of you might be like, why am I not squeezing the chart again? We have done that when we are analyzing daily time frame, 4 hours time frame, and 2 hours time frame. So this time around, we already know the direction of the market. All we know is that if we take this zone and it break below, we are selling it to another zone. Then from that zone, we'll take another buy. You understand? We already know what we're expecting from the market. All we need now is for the market to act so that we can jump in. You understand? So now, on 30 minutes time frame, there's nothing extraordinary. It's still showing us the same move. You understand? It's still showing us the same move. Then we'll go to 15 minutes time frame. On 15 minutes time frame, you can see that this thing is now looking more perfectly like a breaker block. So I'll delete the previous one because all of them are acting on the same level. I'll delete it and mark this place as my breaker block. Then wait for the market. Then on this 15 minutes time frame, I'm not seeing anything extraordinary. There's actually a candle I'm expecting. There's something I'm looking for at this level, and that is why I'm moving down to 5 minutes time frame to see what the market got for us. So now 5 minutes time frame, now I've seen the candle. So now me, I don't want the run around for the market too. So I'm moving my this thing down. It's not that people taking the buy zone here, they are stupid, but me, I don't get money to the waste in the market. So I'll wait for the market to come here. The only time I will place the entry here is when I see that, oh, the market got to this zone and started forming a reversal pattern. I will now jump in CMP. But for the meantime, I'll wait for the market at this zone so that it will give me a clear hand to set my stop loss in a perfect place. So I'll be going down to 3 minutes time frame. So no, a perfect zone. We can see a candle here, a dodgy candle here. So I will be placing a line there, making sure that my stop loss cover that zone. I'll not bring in my entry again down. You understand? The reason is that this trade, I'm not taking it as place order. You understand? I'll wait for the market to come to this zone and do the rubbish you need to do before the reversal. So on that again, I'm going to a minute time frame. On 1 minute time frame. On 1 minute time frame, if we change it to liquidity clear trend line, we can now see we have a reaction at this zone. So I'll be removing this line now, pushing it out so that my chart will not look dirty for those of you that is taking signals whenever I post it. So I'll push it this way and I'll wait for the market at this level or this level. So what I'm going to do now is I'll place the entry in this zone. I will be expecting market a movement to this zone to sweep them, then coming up again to before our previous buys level, then place my stop loss below the one down, then expect the market to come back to do the rubbish you want to do. You understand? This is actually what I'm expecting from this market. So now we can now wait for this market to play out. This gold, for those of you that don't know, this gold. So what am I expecting from gold? I'm expecting the market to do the rubbish you want to do, come down to this zone, show me a pullback, maybe a rejection candle or a reversal pattern. Then I'll jump into the market. That is it. I believe everything is okay. I believe we understand everything we are doing here. And if you have any question, you can ask, please. If you have any question, you can ask. If you have any question, you can ask. Please keep liking the live, please. The reason you should like the live is because it helps us to kind of share the live to people. You understand? Like TikTok will help us to share the live to people that are kind of watching the similar things that you have been watching. Please keep liking the live. I'll be going live very soon. So here we have our chef JPY. Yes, chef JPY. When the market opened yesterday, I expected the market to break above this level, come back for a retracement, then continue buying. You understand? So now I don't just one thing you need to understand that even if I catch a good move, most of the time it's only good that when I catch it, sometimes I enter. You see, Sunday night and Monday morning, I don't just jump into a trading anyhow. You understand? This is the day that mark their companies open for the week, and when they open, they will have the weekly meeting. when they have their weekly meeting, they do the counterbalance of what happened last week, and you see new news for the week coming out from Sunday evening to Monday morning. You see news coming up. Then all these things bring spread in the market, kind of manipulation in the market, kind of slow movement. You understand? These are the things. Then is actually perfect for you to take. You see, Tuesday, Wednesday, and Thursday is more perfect. Then on Friday is always volatile sometimes, but I prefer trading gold on Friday. Yes, if you check very well, all these movements we have caught on gold is always on Friday. You can check. You understand? So like, subscribe, share, and check the other videos so you'll learn something from them. So now this is Euro USD. Euro USD, actually I expect two movements. The movements can decide to respect this zone. The reason I'm playing a crucial game on Euro USD because USD is Trump can just wake up and decide to make a speech or decide to say something. So because of that, I'm paying attention to the movement. So if this market's already retested to our trend line, so I expect it either to fall to this zone and show me a reversal pattern, then I'll scalp it from here, or the market should gradually come to our main demand zone, pick us, and continue the movement. At least I'll feel more comfortable taking this trade here. Taking it here is a high risk. You understand? So that's why I'm just waiting for you to do the rubbish you have in mind to do. Then CAD JPY. Now this CAD JPY, you can see the movement is a kind of liquidity coming here. I want you to sweep all these things below. We also have some below here, but I want you to sweep them below. Yeah, sweep them, pick my order. At least even if you want to go down, you should give me a little profit, maybe 30 pips or 40 pips before even trying to pull back. That's what I'm expecting. Then this one now here, this one is GU. This GU. Now Euro, the same way I expect such a movement on Euro USD, the same way I expect such a movement on GU. You understand? So continue the movement down to this zone and pull back. Thank you so much for watching, and I believe you will enjoy the videos. Go to YouTube, CAPITALFX, and just type CAPITALFX and watch the videos. If you want to learn, watch the videos. You will learn a lot of things. Then you can come back or go to the comment section and ask a question. I will be uploading new videos, and most of the videos I'm uploading is from questions that people ask after watching the video I posted. You understand? Then I'll use another video to summarize the question and answer it. So thank you so much, guys. I really appreciate you guys for joining. Let me cut this video before YouTube go do me shake.